Hi everyone, welcome back to Delhi Investor Association. Today we have a really special room lined up, and it's one around event-based investing. And for this, we have Tushar and Ghanisht who've come to share their insights. Uh, all of you know Ghanisht. For Tushar, let me give a bit of a brief bio. So, Tushar is a lawyer by qualification, and he's been an investor since the last 10 years. Um, as a lawyer, he assists companies with regulatory clearances, fundraising, mergers and acquisitions, corporate restructuring, and the likes. As an investor, he calls himself a self-confessed corporate filing addict, uh, and his investing framework is a bottoms-up approach to understanding business trajectories and corporate events from indicators tucked away within corporate filings. Hi Tushar, hi Ganesh, great to have you both here.
Thanks, Krishna, for the introduction. What we're going to talk about today is event-based investing. It's not really a strategy as such, but it's a manner of conducting bottoms-up investing. Now, I'll give you a little bit of a background on why I got into this and what my journey has been so far. So, I started investing sometime in 2012. And of course, like any person who's starting off in the markets, I had absolutely no idea of what to look at, what to read, how to understand things. And so I spent like the first 2 3 years of of my investing experience basically just relying on information that I was getting from various sources. Twitter and all wasn't really a big thing back then, so we used to rely on WhatsApp. And 2 3 years, go through like some bull phases, you go through some market downs, up. It was a time when the market was quite volatile, so you're getting inputs from a lot of sources and you don't really know what is working and why it's working and why it is not working. So the one of the first questions I asked, one after I spent like a year or two doing this, is like, how do people get access to information which moves the markets, and how do you get to it early? Because these days, anytime you're looking for new ideas to invest in, where you can find like a stock which has good triggers around in the macro environment, for example, you are basically relying on other people distilling information. Let's say it can be exchange filings, it can be commodity prices, it can be anything. You're basically relying on secondhand data. And I wanted to get to the bottom of why can I not have this information myself first? Why do I have to hear it from a chain of three to five people who have forwarded it to each other? So that's when I started looking at exchange filings as a source of information. And it's basically thousands of filings which happen, sometimes hundreds, sometimes thousands of filings which happen on the stock exchange, either BSE or NSE. And what I've come to do is I've come to incorporate finding triggers in exchange filings for bottoms up investing. So I've noted, after looking at exchange filings very deeply for a few years, I started realizing that there are a lot of patterns which are hidden in exchange filings. So these patterns, once you start processing primary information from the exchange filings, you will be able to see patterns as they play out in the market. For example, I'll just give you a very very recent example. So paper stocks is something which everyone would have heard about in social media, that they were doing very well up till a few days ago. Lots of very sharp spikes. Now paper stocks is something that if you'd been looking at exchange filings for, let's say, the last 3 to 6 months, you would have realized that there are a number of companies in this sector which got an upgrade because the economy was opening up, earnings expectations were supposed to be better, and they had weathered the pandemic pretty decently. So you started seeing credit upgrades, and you also started seeing, like the main company which actually caught my interest was JK Paper. JK Paper announced that one of its capacity expansions, which was going on since 2018, has actually just gotten completed in 2022. So they, made a filing on that we are commissioning this plant. And then, when I further looked into the entire scenario, like credit rating upgrades of other paper companies, I looked at 8 to 10 companies, and I realized that this is a sector which is probably poised to do very well from here on. Now, if you go and search on, let's say, Twitter or anywhere else, you see, paper stocks are have done very well in the last 1 month. Maybe now, of course, market is extremely volatile. They might not be doing as well. But there are a lot of cues and patterns that you can find in exchange filings, and I think that is for any do-it-yourself investor who also wants to do bottoms-up investing. I think this is the way to go to get triggers early, and then form your strategy around that.
Cool. So, since you said you can form your strategy around events and exchange filings like this,
Yeah.
would you say that this in itself is like an independent strategy, or is it a complement to traditional forms of investing and trading?
No, so this is just an input that you can use for different strategies. For example, if you're a, if you're into trading, you're into short term trading, and even short term, medium term, whatever kind of trading, you're into technicals, you're into charts. You can get a lot of corroborating information if you're also looking at filings. If a lot of the stocks which you will see on Twitter being discussed as this is going to have a breakout, that is going to have a breakout, you you look at it, and then the fact that you have read about these companies just 2 days ago or 3 days ago because they made some important filing, you will also get a lot more inputs for the decision you're going to take. So it's corroborating something which you may be seeing on the charts as well. Why is there demand in the stock? Why are people buying the stock? Why is there such high volumes? A lot of it can be explained by an exchange filing that was made. So and so this is like on one side of it. Now on the long term side of it, if you're a long term fundamentals based investor, you can you can look at investor presentations, you can listen to transcripts. There's a whole plethora of information you can find in exchange filings, which can allow you to which will actually serve as inputs for any kind of strategy that you're doing. So even if you're doing special situations, like till like it was quite a hot topic in the at least in the as far as 2022 is concerned, all of that is information that you find again from exchange filings. So what is really missing for people actually is a system for actually processing all of these filings quickly and efficiently, so that you can get to the crux of what are the important kind of filings to look at. But a lot of it comes with experience, but it's definitely a good place to start.
Great. Tushar, some of the audience members are finding your audio to be slightly low. Is there anything you can do to adjust it upwards?
Yeah, I'm sorry. I think my Wi-Fi was off, so I've switched it on now.
Okay, okay. Um, so you spoke about exchange filings. Within these exchange filings, there are obviously subtypes. Which kinds of subtypes are the ones to look out for?
Okay, so you have to understand one thing, that exchange filings are certain mandatory disclosures a company makes in the course of doing its business. No company is ever in the business of just making exchange filings. They're doing business, and for certain events that take place, they have to make disclosures to the exchange. So if you look at any kind of a business, if a business wants to grow, let's say it's a company you've never heard of before, and it's a company which is looking to grow, a fundraise or a capacity expansion is the two basic ways to look at stocks which are going to do something because they're raising money for something. So when it comes to capacity expansion is actually a very good theme to be looking at. Of course, you need to know the sector and everything, but so basically, when a company wants to expand, either it has the money lying with it, or it will need to raise money to do it. It can be debt or it can be equity. Now, preferential allotment is one way you can raise capital. If you don't have the money yourself, you can raise debt, or you can or you can do a rights issue. These are the only three ways you can actually a company can raise money in the market. So all of these have certain disclosures that have to be made. So you will see that if you go on the BSE announcements page website, you will see that preferential allotment has like a series of filings under in that category. Similarly, a rights issue as an event will have a series of filings. So if you understand how businesses, what are the kind of inflection points that come in a business and what they need to do to capitalize on those inflection points, you will also understand at the same time that they will have to make certain filings. So you look for those kind of filings. So capacity expansions is definitely something which I look at very closely. If there is a preferential allotment, for example, they If there's a preferential allotment, then you're generally looking at how much are they raising, versus their market cap or versus how much fixed capital they have, who are the people who are investing in the preferential allotment, and what are the reasons that the company has given for raising these funds. All of these three things can be found in exchange filings. So in a preferential allotment, you will have an extraordinary general meeting. An extraordinary general meeting will have a notice to the EGM. Notice to the EGM will have an explanatory statement. So these are just things which I have figured out over practice over time, that when a company is looking to do something, it needs to make filings, and you just need to be able to look out for those kind of filings.
Fair point. Somebody in the audience asked, what the website for exchange filings is. Guys, it's the NSC or BSC website. That's why it's called exchange filing, because it's filed on the exchange. Um, to move forward, can you provide some case studies or examples of investments made using this method?
Okay, yeah. So I'll give you two specific examples of companies, and I'll give you two specific examples of sectors. So last year in August, so there's this company a lot of people might have heard about by now. It's called Natural Capsules. It's a small cap, micro cap category. So this is a company for which I've been looking at filings for, let's say, a year and a half. And in January or February, I saw that they had made a filing. This was January, February of last year. They had made a filing that they were looking to acquire an API plant from a company which was owned by the promoter of Strides. So that was my first introduction to this company. And then I looked at it and I said, okay, this is a company which is trying to get into a different field, related but different field, and looks interesting. But I did not have much to go on, so I just like let it be. In 2000, so in August of the same year, they essentially announced a rights issue. After they announced the rights issue, there was like a 2-3 month period till the rights issue actually started. And just before the rights issue started, they came out with an investor presentation. Now, since I've been looking at filings for a very long time, I can usually pick very quickly, if this is the first time a company has made a presentation. So I was right on that. It was the first time they made a presentation, and it was quite a detailed presentation which answered a lot of the questions which I had when I had seen looked at it previously. So that was a trigger for me that things seem to be heading in the right direction. First, they were trying to grow by buying a plant. That didn't work out because the deal fell through. Now they're raising capital, and in the presentation, they've said that they've applied under the PLI scheme, and they've got a couple of products for which they'll get a subsidy as well. So for me, as a company which was a micro cap, which was trading at a relatively cheap valuation, and looking to enter a growth trajectory, this was the right sequence of events which I and I pulled the trigger when the first presentation came out. So this is one example. At that time around, the price was around 150 rupees. It's shot up a lot now. It's around 400, 500. Another company is this company called Yasho Industries. So Yasho Industries, again, there was a capacity expansion filing which I caught. And then I looked into the company, I looked into their annual report, I looked at the historical annual reports, and I found it was a relatively clean company with the promoter, which was basically a family, had a long experience in this sector. So again, it was right that at that point in time it was trading quite cheaply. It was, I think, around 400 rupees at that point in time, around 8-9 months ago. And then after that capacity expansion, they basically announced another capacity expansion like a month after that. Then after that, I think they did a call or something, and then Kacholia took a huge stake in the company. Now they have announced a capacity expansion which is 3 times of what they had originally announced. Alongside, in the last 3 quarters or so, their profits and sales have gone up like 3-4 times already. So again, that was something which you just see, you just look at it, it checks all the boxes. It's valued quite cheaply. That you found a trigger, and that is something which has played out very well. So I think it was 400 at that point in time. It's around, I think, maybe 1600, 1800 right now. So this is just an example of how everyone in the market actually follows wherever growth seems to come. And if you get to know about it 6 months later, you're probably already too late. So that is like the core philosophy around the example, at least, which I have given. Apart from that, I'll give you two sectoral examples. So last year in like early last year, we noticed that there was a lot. I noticed that there was a lot of there was a lot of upgrades in the textile sector. So I went through all the credit reports. Credit reports are quite detailed, though obviously not every agency is as good as the other. But anyway, so it gives you a lot of information which is basically sourced from the company itself. And basically, what I found was that everyone in the sector was expecting to have a very good time in the next 1 year. And then after that, the government also, reinstated the subsidy scheme which used to be there for textile exports. And since then, literally, and so we picked up all of I picked up all of this. Ghanisht also picked up all of this, and we said, okay, so this is a sector which seems to be headed to a good time. And this is like a year and a half ago. So now textile stocks since then have gone up like four, five times already. Sugar is also another very easy to follow example. Like I know it's much maligned on social media in general, but if you just follow exchange filings, you'll find sugar companies doing capacity expansion for ethanol all the time. Like every week there is a new one, and the market generally just re-rates the company because these are companies which just have cash lying around doing nothing, and now they're applying it to something. I'm not saying that this is a good sector to invest into, and you should be an investor in the sector, but again, the proof of the pudding is in the pie. So you see the filings, and then you see that everyone is running after the same stock. So these are like basically 3 4 examples I want to give of how easily you can actually explain market movements by exchange filings itself.
Those were some pretty detailed examples, and I think gave the listeners an understanding of how the whole process flow works. Something that was asked just now in the chat, as well as something that came up for me, was what are the fundamental checks and balances that must go along with this kind of investing?
Okay, so actually there's only one fundamental check and balance, is that you should always treat it as a starting point for you to look back as well as look ahead. Every time you see a trigger does not mean that it is not already priced in. So in the case of when I looked at, let's say, JK Paper and the commissioning of their plant in 2022, it seemed to me that this was a very opportune point in time for a plant to come online, because the schools are opening, the offices are opening, so paper demand is generally expected to increase a lot. But if you take like a similar filing made by another company in another sector, it may already be priced in, for example. So if you're talking about commencement of production filing, now in this particular JK example case, JK paper example, the actual capacity expansion announcement came out 4 years ago. The action that you're seeing is now at the commencement time. So over 4 years, that whole expansion thing seems to also, at least in the market size, seem to fall out of favor. So they are generally not expecting it. And when that filing comes out, then everyone looks at it and says, oh, this sector is anyway in a sweet spot, and this person is now the second largest in the country, so everyone's running for it. But at another point in time, you see someone, let's say in the engineering space, who undertakes, like sets up a new plant and then makes a grand filing that, oh, we have opened the plant. You may see absolutely no reaction to that. So you all, through experience, you have to understand that whatever information you're getting, you have to contextualize it in terms of what happened before it. Is the price of the stock already accounting for all of this, and is it still attractive enough for me to think about investing into this for whatever period you may be thinking of? So the main check and balance is to contextualize whatever information you're getting.
So I've got two follow-up questions to this.
Okay.
One you spoke about what's already priced into the stock. So one, I wanted to get your sense on how do you do valuations, and second, you spoke about this being the starting point for your research. So again, you said that this is something that you need to understand the industry. To what extent would you say that familiarity is required?
mm, you need some level of familiarity. So okay, can you just repeat the question once more?
Yeah.
I got lost thinking in the middle when while you were asking
Yeah.
the question.
So the second question was around what level of familiarity, is it that you need? And the first question was around how you do valuations.
Okay, so I'll take valuations first. So this is absolutely a personal choice of every investor. For example, someone who is also using like technical charts or stuff like that to come to a decision point may buy something which is very expensive simply because it looks good on the charts as well as it looks good in the filings. So it depends on your time frame how long you want to do it for. Personally speaking, you know the valuation which I am demanding to buy, let's say, is depends on the category of stock I'm looking at. So if I'm looking at a micro cap or a small cap company which is less than thousand crores in market capitalization, I will not be willing to pay far more than maybe 10 or 15 times earnings. And in that, I'll look at their historical, P&L, and I will try and normalize and say, okay, they earn at least 30 crores a year. So I'm willing to pay between 350 crores market cap for this, accounting for the expansion, let's say, which is coming into place. So my personal philosophy is never to overpay, because every day, if you follow exchange filings regularly, you will find something to buy almost every day. You have to through your experience, observation, and practice, you have to identify those moments where you can actually make the decision, but you don't have to make that decision every single day. So you wait for the time where you get the opportunity at the right price as well. Many times, you will look at a filing which and you'll say, oh, this is very significant, but then you look back at the last 1 year's filings and you'll realize that this is pretty much already well known and the stock has already gone up 3 times in anticipation of this. So I will just look at it and I'll say, let them try and execute and fail, and I'll never look at it again, or let the market conditions go down. I'm in no hurry, because I'm generating ideas left, right, and center. So that is generally how you have to anchor yourself. This is common sense actually. This is not really a strategy.
So interesting. How how do you size these opportunities in your portfolio?
How do I size? Yeah, this is again this is a matter of personal portfolio construction. But as someone who is pretty much doing full time investing, and I'm 100% invested into equities actually. So maybe 70 to 80% of whatever I have invested is into maybe mid caps. Some of them can be small caps, some of them can be large caps. It really does not matter. But I tend to allocate a lot larger to things with a lot more certainty, because when I'm investing into smaller companies, I'm hoping that the multiples that I make will be significant enough for it to contribute meaningfully to my portfolio. So if you're investing large amounts of money, you will at some point in time be thinking of safety first, and not how much how many 100% can I make every year. So it's a matter of, are you just dabbling in the market, are you invested a lot in the market? I generally try to keep my overall allocation to micro caps or small caps to maybe 20%, and wait for them to grow to a larger allocation. So I won't sell just because they've gone up, but I'll basically make them deserve the space in the portfolio by growing. So 20% is the outer cap for like all, very, very, when you're looking at small caps, micro caps. And one thing to also let everyone know, that when you're looking at exchange filings, you're getting filings from every single company. You're looking at every single company. So you could look at something which a large cap has announced and have a particular view on it, because let's say you're an insider in the industry, and you say, oh, this is a event which I find very interesting for this company because of my specialized knowledge. So it's all about finding the opportunity which maybe you understand better than other opportunities, because the filings will be from the entire range of companies that are listed in the company in India.
Makes sense. Just give me 1 second. Yeah. How do you look at management change as an event?
Okay, so when you say management change, do you mean like open offer takeovers? like let's say for example has happened in esports.
No, not necessarily. Even something like, CFO resigning, um, CEO resigning, MD, anybody like who's like in the key personnel.
No, I don't know. So I care about more about the promoters than I care about the management generally if I'm looking at an investment, because you see when you talk about CFOs and CEOs, apart from a handful of very large companies, we don't really know the background of the people that are actually CEOs and CFOs. So if a company has CFOs which are quitting quite frequently, yes, that is a huge red flag. But generally I'm only looking at where promoters are changing, because generally in India, in India, more we have a promoter-driven culture as far as companies is concerned. Whereas when you go to the US, it's a lot more lot more professionally managed. So the actual management, the CEO, CFO, COO are are responsible to a large extent for for the direction in which a company goes. Whereas in India, the key difference is that promoters drive a lot of what happens in the company, and even if they're not the CEO or these executive positions, they will definitely be guiding things very strongly at a board level. So this is something which I think everyone must be aware of. So CEO, CFO, no, since you specifically said that. But if a management is changing, if let's say one company had one set of promoters, and that set of promoters changes, or a new promoter gets inducted, then I'm definitely interested. This is actually a category which is takeovers, where managements change, like happened with, like a big example is what happened with Mindtree a few years ago. So in that case, and if you're looking at, again, if you're looking at exchange filings every day, you will find companies with 5 crore market cap also having a management change. And sometimes if you're looking at who the acquirer is, or who the person coming in is, if that person is someone or if you can Google and find out that this person seems to have a lot of capability, then yes, that is definitely something which I'll be very interested
Tushar, this is something that just came up even in the DMs, and I was thinking about asking you
in.
about your opinion about it later, but since it's come up, I thought I'd bring it up.
Go on, go
How
on.
are you seeing, this India Bulls management change, especially because a lot of people seem to be worried about, skeletons showing up post merger. So, what could skeletons like that be, in a company where there are land assets which can be verified, there are cash assets which pretty much can be verified. So, what would be skeletons like that, and also how are you looking at this merger?
So okay, so I'll just zoom out a little bit. And so everyone here has probably had some experience with dealing with real estate in their life. And I think everyone knows how opaque the entire industry is. You never know the real price for things. You never know how much money has changed hands. So, keeping that in mind, the way I look at real estate in terms of listed companies, in terms of listed companies, I find the attractive things, the attractive opportunities to be where you can own commercial real estate, like through REITs, because in real estate companies which are into development, historically they have never made money for anyone. Nobody knows, nobody can predict the cash flows, and as far as the business itself is concerned, it tends to take a pretty sharp hit when there are macroeconomic conditions in the economy are not very good. So as far as this merger is concerned, I don't really have a view, because I as people are saying, there could be skeletons in the closet. I have no idea. It just find I've put this industry in the space of things which are just too difficult for me to understand. If someone gives me a REIT or an REIT, real estate investment trust, which tells me that these 5 buildings in Gurgaon, the rent from that is going to come to you, your proportion of the rent. I'll be happy to invest in that at the right price. But I don't understand real estate in listed companies, so I stay away from it.
Cool. Makes sense. Another question from the audience is around how many companies do you hold at one time, And how many companies do you think is it possible to track in one go?
I mean, so when you talk about tracking, I mean, it's not so difficult to sign up to a website like Screener and put things on a watch list. If you're talking about, if you're willing to do that, I think you can easily, you know. So this question depends on where you are in your stage of your journey as an investor. I have around maybe 150 companies on my watch list, and for each of them I don't even pay attention to what's happening till a particular kind of filing from that company strikes, my watch list. So these will be a lot of really small companies. If they publish an annual report, if they do an EGM, if they do a preferential allotment, these are things which I'll be looking for, because I know that these are the triggers at which point I need to start looking at them seriously. I might have looked at them pehle. I might have, looked them up on Trendline, Screener, and all these, said looked at it and said, okay, fine, looks okay, but not really something which I want to get into right now. I will put them on my watch list, and if something else develops in that company in the future, then I will take a look at it again. And a large proportion of investments I make are through this technique where I look at it once, I look at the company once, I try and do like a deep dive into annual reports, presentations, whatever I can find, and then after that I just put it in the watch list and I leave it. I keep looking at whatever is coming over the years, and after a few years I might just take it off my watch list saying that it seems to have died. I don't think that's a problem. But when you're starting off, having 150 companies or 100 companies or even 50 companies on your watch list is probably a bad idea, because you want to focus on practicing. You need to practice something. If you want to invest, if you're a long term investor, you're going to invest and you just sit around and wait for the money to be made? Maybe not. You will want to do something else as well. So what I did, at least 7-8 years ago, was I started practicing it. I didn't want to follow 100 companies. I wanted to start following various kinds of events to understand what moves the markets. And along with that, since for every event I had to look into what this company does and what is the context of this company, I started learning about a lot of companies on the side. So now in the future, if something happens with that company and I see the filing and I know exactly what has happened in the past as well. So it's a bit of accumulated knowledge. If you're into like do it yourself investing and you're serious about it, you want to keep doing it for as long as you can, it's a passion for you, then this will get easier over time. But initially you have to focus on understanding the market rather than understanding just following companies to see what happens with them.
Any general advice or suggestions as to how one would go about beginning to track these companies? What would make a company show up on your watch list, and how would you decide that this is not worth tracking anymore?
Okay okay so that's several questions. I might ask you to repeat some of them.
Sure, sure, go ahead.
So so okay, just repeat it once more, sorry.
Yeah, so I said,
Ask me one question at a
yeah,
time. I'll
cool.
answer. I'll answer that.
Cool. Uh, General advice or tips as far as creating such a watch list goes, and what would be the entry criteria?
Okay, so the first thing is that you need to identify, certain 3-4 categories of very high impact filings, which generally tend to have a price correlation. So, as I said, capacity expansion is one of them. Any kind of fundraising is another type. Any type of merger, demerger, scheme of arrangement. The legal word for it is scheme of arrangement. If there's any scheme of arrangement, that is something which you should definitely be looking at. So, if you know that there are these 3-4 events, which if I catch for any company, it will be at least part of a series of filings which show some kind of event happening in the company, which generally tends to have a big market reaction. Now in that, once you focus only on, let's say, 3 or 4 particular categories, you will start seeing maybe 15 filings of each type every day. Now when you see 15 filings of each type every day, you will also need to look into what these companies are. Along with that, you will also, this is not the only way. You don't live in a silo, right? So you will generally have, you'll be having exposure to media, you'll be having exposure to news, you can also have access to Google. you can find out, in terms of each, where each of these companies lie, in which industry they lie, what is happening in that industry. So if tomorrow I see a capacity expansion from a textile company, I already know for the last 1.5 years that this sector is doing very well. Now if you see a capacity expansion in some random industry, you see two three from a random industry, you look into, what is happening in that industry. Maybe you can look up the government regulations. Maybe you can just go to Google News and search for that industry in India. You can see, let's say, chloralkali is also doing very well in the last few weeks. There's a reason for that. So, and you also, some of this also showed up in exchange filings because there were a lot of upgrades happening at the same time. So when I see like something is happening, I generally try and look at what is happening in the industry and the sector, to see if it makes sense for this company to be doing what it's doing. And once it makes sense to me, that is when I put it into the watch list. If I find just a random capacity expansion happening somewhere, and if it seems like it doesn't seem to be part of a broad trend in the industry, then I will be more circumspect, and I will not probably put it in my watch list at that point in time, unless I see another filing some days down the line for that. So that's kind of how you do it. Whatever you're looking at, that trigger has to, in the context of the larger picture, has to make sense, and then you put it into the watch list. And then in the future, in the coming days, you look for corroboration. Like you looked at this, okay, you thought that this industry seems to be doing well. You look for more corroboration. You might see credit upgrade. You might see other companies in the same sector raising money as well. And that is where you start getting these cues which you can connect the dots with.
So you gave examples around paper and you gave examples around sugar, both being, cyclical sectors to some extent.
Yeah.
What percentage of your portfolio or your watch list is actually cyclical sectors, and how do you understand how to exit them at the right time?
Okay, so if you're catching a cycle early, and I'm just telling you this from experience, there's no hard and fast rule, because sometimes you might, the filings may be telling you that this sector is headed for an upcycle, but something else may happen in the background, and the entire thing dies at the same time. For example, you have a lot of macroeconomic volatility right now. People are saying, oh, the credit cycle will start now, and this is going to be the biggest capex boom of the last 70 years, so on and so forth. But let us be real, if the commodity prices don't go back down, that credit cycle is probably not going to happen. So you might get one signal from one way, but common sense tells you that, okay, there might be some, it may not be as easy as that. So you have to always you always have to see. Yeah, so you always have to contextualize what you're doing and see it within that framework. Did I answer your question or no?
Yeah, you said that you identify the cycle early, and
No,
then
so
you
your question
monitor
was,
it.
when do you exit? When do you exit? So
Yeah.
I generally tend to think that I try to correlate from the market. If I see people piling onto textiles right now, when I see them piling onto textiles right now, I think that that might be something which is approaching a top, because right now margins are also getting squeezed, and some companies are trading at very very high valuations. So once it is already increased by 4 or 5 times, and the underlying macroeconomic conditions have changed to some extent, that's generally a good time to be at least taking some profit off the table, a large part of the profit off the table. See, people say that you can make 20x, 30x, 40x also, but I am more concerned with having a repeatable process by which I can keep doing the same thing again and again and again. So that's my perspective. You take whatever you're happy with, and you get out. There's no hard and fast rule.
No, I think that makes a lot of sense. Personally, I also have a process-based investing system. But you've given me now the broad contours of your investing system. Uh, how have you refined this system over the years?
Okay, so basically, in when I started in 2012, I wasn't really looking at filings. I started looking at filings around 2014, and at that point in time, we didn't have people putting up exchange filings on social media, or like Twitter, or things like that. Generally, Twitter is the only thing I know of apart from Clubhouse. So I went straight to the exchange, and at that point in time, we used to have maybe of 1 or 2 thousand filings per day, and I spent a lot of time, just going through it manually. It was a huge pain in the backside because there would be like 60 pages, and you're just going down, trying to find one of the relevant filings among the random standard format filings which they'll do. So if you ever go and look at the actual corporate announcements page on BSE, you can actually just go to the BSE homepage. At the top, you have this tab called corporates. You press corporates, and on the right, you'll find this link called announcements. So you click on the announcements, and a massive page will open, which will have like the header, and it will have like a small description. Now, if you actually go and open this right now, you will see there will be a bunch of filings which will be just standard format, certificate under regulation so and so, any number of duplicate loss certificates. So all those are also mandatory filings, so they have to make those filings as well. Now, I am not concerned with 90% of the filings which are made in a particular day. I am only concerned with like maybe 4 or 5%. And the exchange website has various categories under which the filings are made. So I gradually developed like this thing that I'm going to only look at the ones which have preferential allotment. So I would just take out only those, and then I would just only look at those. So that would be maybe 15, 20, 30 filings a day. Now, over and this is something which I did till like 2016, 17. Then I started I started doing this. I made a Google sheet, and then I started doing something with that. And eventually, now, because I've been reading it for so long, I've come to understand that there are some categories which don't matter. They will never contain useful information. And then there are some categories which will always contain useful information. So I have just basically identified that. And regulation 30, the link you see above, that's like that's basically a newsletter service which I made, which basically focuses on certain keywords which appear in exchange filings, which I over time have come to realize that if I read filings with these keywords, then I'm more likely to be looking at something which has significant impact. So just through experience, I have managed to start filtering these exchange filings in an effective manner, and I just use it for myself. I've always used the same thing that I made a service out of it, so anyone can sign up, and they get access to the exact same filings that I look at every day. Of course, my interpretation of those filings will be based on 7-8 years of having read those filings. But a lot of people, there are a lot of investors which you will lot of institutions, a lot of analysts, a lot of hedge funds, they actually subscribe to this. I don't know how they use it, but I'm pretty sure they use it in exactly the same way that I use it, which is to get triggers. There are also a lot of very learned individual investors who also do it this way. And this is just something which nobody will sit and write and tell you, okay, oh, look at this filing and then look at that filing. It's just something which someone learns to do over time. And it's now what regulation 30 is like my logic of filtering. It's codified. So that's pretty much what it is. That's how I do it. You can actually get it done from, you can see it from many other sources. There is Screener, of course. Everyone knows Screener. Then there are a lot of, if you're on Twitter, you'll find 2-3 other initiatives which are free. You can access there. You have Trendline, you have Market Mojo. You can there are sections there which will be like today's significant filings. So it's not like nobody can. You need access to a particular kind of service to do this. You can actually start straight from the exchange itself, and then pick the site you want, which does the best filtering for you. So that's pretty much how I do it.
But your newsletter also comes along with a Slack community, right? So what
Yeah,
what
so Slack
actually happens
community is
there?
where I post my observations regarding the filings. So one thing which I find a lot of I find I'm able to do just because I've been looking at things for so long is spotting the first time a company comes up with a presentation. And the reason for that is that I've been looking at every single day for the last 6-7 years. I've been looking at filings, and in result season, it's usually the same companies which keep putting up investor presentations. But if there is a name for a company whose presentation I've never read before, and those kind of stick out because you tend to keep reading the same company's updates so often. So the ones which I have not put out anything before, I spot them pretty instantly. So that for me, when a company puts out a presentation for the first time, that's a company looking for attention. So I pay a lot of attention to companies putting out a presentation for the first time. Not all of them are worth investing in, but some of them are, like, for example, natural capsules, how that worked out for me. That was basically, oh, this is the first presentation, means they're serious about this. So I post these kind of things on Slack. Ghanisht also posts certain things. We discuss special situations, rights issues. So yeah, that's basically where I put my observations on whatever I'm reading.
Great, great. I think we can now open it up to the audience for Q&A.
Sure.
Guys, if you have a question, just please raise your hand and I'll pull you up. Hi, Deepak. You can ask your question.
Hi, Krishna. Am I audible?
Yeah, yeah.
Yeah, you're audible.
Yeah, okay. Hi, Tushar. First of all, great session. Yeah, it's a lot of insight that we youngsters and young investors can get from such amazing sessions. Thank you so much
Thank
for
you.
that.
Thank you.
Yeah. Tushar, I had one simple query. Like, you told us to look at the filings, like, when they're placed in BSC and all, how, as and when the filings are done, you probably can get triggers from there. My question here is, how do you know which industry filings to look at? How do you, know key, because, like you told, there's so many filings done by so many companies on a daily basis.
Hmm.
For me to know that this is what I'm looking for, or this is the industry that I should be looking for, like ethanol blending and all sugar companies, that you can get an idea because, okay, the government is making a particular scheme saying that,
But where did you
ethanol
hear
blending.
about ethanol stocks for the first time?
Yeah, that is when the announcement happened saying that, Prime Minister Modi is bringing up this kind of scheme. The government of India has brought in this kind of blending scheme.
Hmm.
Wherever you see the chatter is saying that, all these companies are coming up, Dwarikesh Sugar and such companies are,
Hmm.
increasing capacity.
Hmm.
But that was pretty late. That we got to know after people are already invested.
Yeah.
So my question is, how do you preempt these things, like saying that, okay, this policy has come, like just now budget is announced. Usually
Hmm.
that's my source of information, saying that budget is announced, so EV budget is announced, there is some thing for, particular mining or something like that. So that is from where you take your trigger, saying that if this is announced and this is your biggest company in this sector, so probably there are some microcaps which can turn out to be champions of the sector later on. So then you start focusing and then you start looking. That is the only way that I have done so far. But that
Yeah.
is
So
one
you
time
answered.
event.
So Deepak, you've answered your own question. When you're an investor, you are not only you're a citizen of the world, right? So you get information from various sources. It can be reading the news, it can be your profession, it can be any kind of media, social media, or anything of that sort. So when I look at, let's say, when I was telling you about the textile example, for example. So textile example may, at the same time, you could, if you just looked up on Google and read up world news around that time, and for, the global textile industry, you would have noticed that the US basically had imposed a ban on import of cotton from a particular province in China, which was their largest cotton producing region, because, there were some concerns about human rights violations, so on and so forth. So this is one thing I read around the same time. At the same time, I also read, so in Livement, actually, I remember the article as well. It was an article which said that the Ministry of Commerce is going to reinstate it was called the ROSCTL scheme, for basically giving incentives to people, to exporters of goods from India. ठीक है, उसके साथ साथ a few weeks later that scheme actually came into effect, and the incentives are actually quite substantial. Like a company like KPR Mills, I think, makes, I think, 30, 40 crores, 50 crores per quarter in these export incentives. So, maybe 10-20% आपका EPS सिर्फ उसी से बढ़ा है. So anyway, so I looked at these two other additional factors came to my attention at the same time, and that is how I came to the conclusion that yes, everything seems to be checking out for this sector right now. So if you ask me the question, how do you get to know, you have to find better sources, you have to follow more sources of information.
Okay, so regular keep on check with the regular news that is happening. Keep
Not
on
necessarily.
like
If you got like, let's say for textiles, you got a clue from the this thing that you from the filings that you've been seeing a lot of upgrades. You will then specifically go and search for things on the internet, right? What is the global situation with respect to, let's say, textiles? What has happened in the global arena? What is the government textile incentives? What have they done for that? These are general searches which are run for every industry. If let us say tomorrow there is something which happens in the power sector, for example, the government says we will give you, since there's a power shortage in the country, I'm going to give all gas fired plants gas at subsidized rates for the next, let's say, 6 months. Now I know, for example, that the GMR urban and infrastructure, okay, 60% assets are stuck in gas assets which do not work because there is no gas. So this is one previous nugget of information which I have from reading the investor presentation. Yes, today the government announced that, I think today's newspaper carried the news that the government has told all coal-fired plants that you have to operate now under emergency conditions because electricity shortages are happening. So whether you have coal or not, we will give you coal, you run the plants. So if tomorrow, let us say that happens for another, so I'm sure this will, I don't know what the economics of this are. Probably the companies will not make any money off this. But if, let us say, the news flow was slightly different, you might use that as a trigger as well. So, it's about corroborate whatever information that you find in a filing, you have to corroborate it from various sources. You can Google it, you can find out. Government regulations is always one thing. Global trade, what is happening in terms of global trade for that product is another easy Google search term. You'll understand whether prices have increased or not. Is there a surging demand somewhere? So this is just about basic detective work. Yeah, you have to corroborate. Is the story checking out from all ends? What I'm thinking. That's basically it.
okay. And another question, just a little on a different, on different side, not the regular news side. You told
Hmm.
sometimes, because of a certain profession you're in, you're
Hmm.
privy to certain information or certain, what do you say, early triggers. Like before it happens, you just know it. Like if you're working in the IT industry, suddenly your company is incorporating certain changes, so there's a something going around, and then you start looking. That is what happens usually. So
Hmm.
like I work as a chartered accountant. So
Hmm.
what happens is sometimes even during our courses, you get to see some changes, like some
Hmm.
rates have changed or some, where the focus is, what the government is trying to do. Either they're trying to
Hmm.
uplift this sector by reducing the tax burden or what they're trying to do. So this, but sometimes it takes a lot of time, even after the triggers are there, after all the
Hmm.
policies are there, it takes a lot of time for these things to reflect into the stock prices, and your capital is lying dead there without making any
And
return.
it may not even be a big enough trigger.
Yes. So how do you differentiate such thing? Because according, like, when I see numbers, I think I have a little understanding. Okay, this is what impact it's
So
going to
Deepak,
create on
I,
this
I
company's
take it,
EPS.
I take an opposite approach to this.
Okay.
If let us, so I love reading or listening to con call transcripts, okay, audio recordings or transcripts. Many times analysts will ask questions where the management will say that, if this happens, this would be fantastic for us. Okay. For example, KPR Mills said that, if the US India the Australia India FTA, when it becomes operational, is going to be really good for us because हमारा 15% of our exports are to Australia itself. Okay, so I take it from, when I said I take it from the opposite front, is that I take the cues from the company itself, that what will be good for it. Okay, then I will try and see, I will read three, four more companies like that company and see whether they are saying the same thing. Maybe that question doesn't get asked to some other company. Maybe it does get asked. Maybe you get some corroboration. Okay, two, three companies in this sector are saying this is a problem. If it gets solved, we are golden. Then it's a matter of me simply waiting for that event to happen. If it happens, then I know that the triggers are already in place because three companies have already said कि अगर ये हो गया तो this would be amazing for us. So I try and my funnel is from the companies, and let the company tell me what is actually going to be great for me. ये contextual होता है, you have to see it. When you, let's say, the sugar example you gave, everything was laid out in the government regulations itself. You do not really need to go anywhere else. So for every context, you have to decide what is going to be the right way to go about it.
I like the point that you mentioned about this, because what happened is, like you told in the sugar concept, the government regulation itself was a big trigger saying that you have to start looking, because the sugar companies will have a different income source that is going to happen really soon. So I
Hmm.
understood the thing from there. But then when you go to the other sectors of the same information, like you say, EV sector ke liye they had announced all the specialized deduction had come in Section 80C, wherein they were like, this is what you're going to get if at all you order electric vehicle, and this is going to happen. Now again, they're like for the charging infrastructure. Again, they had some subsidiary saying that if this
Deepak,
is
Deepak, let me ask you a question back, which is
yeah.
that for a completely unproven technology, unproven everything, why don't you think that there is a lot more scope to find opportunities in sectors and industries that you possibly can understand far better? Because you don't know today whether Ola will remain or whether Ether will remain or anyone will remain 5 years or 10 years down the line.
No, I
You,
agree with that 100%, because I'm also a believer of the fact saying that the first person who gets there is going to spend the maximum amount of money researching the technology, and then there's going to be one person who's just going to rise and use all the information that already somebody else has researched, and then
yeah,
come out and become a champion. I always believe in that. The first person is never going to be the best most of the time.
yeah. So the EV example, I think it's all vaporware right now. I'm not interested.
Okay. Okay. No, because these are the sectors for a fact that India having a huge fuel bill cannot sustain if this is going to be the same in the future. So they're looking at alternative like the Reliance investment into green hydrogen, or this kind of investments that are happening into EV, or other kind of they're trying to now find a different what do you say battery cell that is happening. So these technology for a fact that's going to go up in the future, and the kind of returns that you can make here, I think this is where you're going to make returns, even though it doesn't turn out to be successful in the future. But the momentum kind of is towards this side. The money is flowing into these sectors only, right? Usually for now.
The money for you to make money, money needs to both flow in and then out of the sector also in terms of earnings. So if that doesn't come, then matlab, see, we as investors have a finite lifespan, right? Let's say we are all 30. We cannot wait for 2060 for this trend to make us money. That's my personal view. Don't आप बुरा मत मानना.
नहीं
But
पर्सनल बहुत सही प्लीज कंटिन्यू सॉरी
okay, so I cannot wait till 2060 to make money on EVs. I don't know when that will be. I can't even wait till 2040. Sorry. so if I'm finding an opportunity which I understand better, then I will be gravitating more towards that because boss अपना पैसा है अपना ही outcome है.
परफेक्टली तुषार आई एग्री विथ यू 100% बिकॉज आप 10-15 साल की बात करो मैं तो यूजुअली ऐसा कोशिश करता हूँ कि 5 years में व्हाट आई कैन मेक अपना पैसा है
Yeah,
जितना बना सकते हो अभी रिस्क टेकिंग एबिलिटी है यू आर इन द ग्रोइंग ईयर्स सो जितना भी रिस्क ले सकते हो उतना यू कांट टेक लेटर ऑन दैट्स व्हाट आई बिलीव इन
yeah.
थैंक यू सो मच फॉर दिस इनसाइट तुषार and
No
it was
problem. No
great
problem.
talking to you. Thank you so much for this opportunity, Krishna.
You're most welcome. Either we did a phenomenal job like explaining the topic to them, or we scared them off because there don't seem to be any more questions.
It's okay, man. It's okay.
Cool.
Digesting.
Cool, guys. If you want to, you can always reach out to Tushar over Twitter. Um, his his
You can just
personal handle is
contact us
Tushar.
on regulation 30 at the rate regulation 30. I
Huh.
generally am the one manning it.
Okay, cool. So look at guys, if you want to get in touch with Tushar, the Twitter handle at regulation 30 is where you can contact him. You can also check out his newsletter at regulation30.com. In fact, while this session was going on, I actually subscribed to the newsletter, so I look forward to
Thanks,
uh,
Krishna. Thanks.
learning more from you. Thanks everyone, and in case you missed a part of it, don't worry. The replay was on and can be accessed after the session. Thanks Tushar, thanks Ghanisht. It was great
My
having
pleasure.
you.
Thanks,
Look
Krishna.
forward to
Thanks.
doing
Thanks
this
a lot
again.
for arranging this.
Yeah, my pleasure. Look forward to doing it again.
Okay. Bye bye.